Hello everybody. So in the time it took me to finish my slides, the market is back up way in the green, which means that what you're seeing out there, it went right back up. And it's funny because I guess I made that slide right at the trough of the market, and I had written all noise, because of course it's all noise. Your typical Friday afternoon news, President of the United States crashes the market. Oh, this is a feeling. How many weeks, how many Friday afternoons market freakouts have we had? This is perhaps going to be the theme of the next 3.5 years. Anyways, apparently it crashed because no trade talks with Canada, and my joke was going to be, well, yeah, until Monday. Is it no trade talks until Monday? Apparently Canada, it doesn't want to budge on a 400% milk tax. My guess is they'll drop the milk tax, or they'll drop the digital credit tax. My guess is the trade talks are not over. They're going to keep talking. It's just the way the President of the United States communicates. That's speech, and I judge him on speech. In my view, there will be a trade deal. Note how quick the media, and the media is not good on this, how quick the media has been to bury the China news. They barely talked about the China news this morning, promoting some Supreme Court news over the China news, but now the China news is in third place, and actually they barely discussed it. Like, at least in my world, they barely discussed it, even though it seems like the bigger deal was the China trade deal. It seems like it's done. It should have been hugely positive for the market. No, this is not what we're focusing on. We're focusing on speech on the Canada trade talks ending, and frankly, in my view, they are not ending. In my view, this is all back and forth. This is all chit-chat for negotiating. This is noise. This distracts us as long-term investor. Yes, of course, the US and Canada are going to keep trading. Anyways, moving on, now that we don't really have a crash, I want to talk about HIMS. So HIMS rebounds nicely. And the theme of this video, of course, is impatience hurts returns. You gotta be patient. That's the theme of this video. If you see this headline and you panic about an hour and a half ago, you panicked, you sell because you saw this headline, you're not being patient. No financial advice. Being patient really rewards you. And, it pains me to talk about HIMS again because I saw two people in the comment section telling me they had sold HIMS because they were waiting on a lawsuit from Novo. How do you know a lawsuit from Novo is going to happen? They have a lot to lose in a lawsuit too. These things take years. I mean, if there's a lawsuit, HIMS is going to defend themselves. There could be issues with the patents. There could be all sorts of stuff. Selling or acting swiftly on this news, in my style of investing, I'm just speaking for me, but for my style of investing, that's not the way to do it. I make decisions over the long run, and when I decide to exit a stock, I typically exit them also over the long run. Because short run, the movements, the spikes, they make very little sense. The truth is, HIMS is back towards the 50s. Nice day for HIMS today, up 10% at one point today. Of course, with the I don't really know where HIMS ended up at the day. Anyways, it was a green day for HIMS today. That's pretty good. Not as good as Weight Watchers, although Weight Watchers did go from 25 cents to 31 cents because Novo Nordisk left HIMS. As a reminder, HIMS is half of the telehealth world. I mean, half, is it 47, 48% market share or something like that? They're nearly half of the telehealth world. And Novo Nordisk, they canceled the agreement and they decided to partner with Weight Watchers. And what I will say is that it makes a lot of sense. Novo Nordisk is a 20th century rent-seeking type of company. They're not a customer-centric company. They're not a team with the customer. They're not trying to please the customer. They're trying to make the customer pay. And of course, it makes sense that that, by the way, that's true of most pharmas that were founded in the 90s. That's true of most pharmas who were founded in the 1900s. That's the way it used to be. Business used to be all about building a moat, and then your customer doesn't have a choice, right? Business is about, on a hot day, day you're an amusement park, on a hot day, you sell that hot water bottle for $10 because your customer doesn't have a choice. That's rent seeking. You're not trying to maximize customer satisfaction so that you become a natural monopoly. You're trying to maximize your profits now. Even if your customer is frustrated, it doesn't matter. They don't have a choice. That's the concept of these type of companies. That's the concept of moats. And sure enough, kudos to the GLP-1 players. They've been doing a very good job at charging thousands of dollars for their drug. I mean, like $1,500 a month, $1,000 a month. With GoodRx, you can get it for $1,000 a month. So anyways, I'm talking about the good dose, right? I'm talking about the good dosage with injector pen and all that stuff. Yes, they have promotions. Yes, don't be fooled. They have a lot of, first month is only $300. Well, guess what? That's only the first month. Anyways, it would make sense that Novo would partner with Weight Watchers because Weight Watchers was founded in the 60s, and so they get along. Note how HIMS stock has recovered much more swiftly than Novo has recovered, and HIMS has actually beat Novo. Note how I'm taking HIMS from the moment they went public, from the day they went public, right? So they went public at $9.80, right? And so I'm taking it from that day, and then it dropped to $3 and then bounced right back. I'm being fair in my comparison. Novo, going back all the way to the founding of HIMS, that's 20% a year for Novo. That's pretty good. That's a top performer right there in Europe. Kudos to Novo. But HIMS is actually 31%. So HIMS has had quite a bigger performance than Novo, and my guess is that this delta is going to widen as really, if you want to do a pure play GLP-1, I much prefer Lilly as a pure play GLP-1 over Novo. I much prefer it. Retatrutide is going to be a much better drug. Tirzepatide is a better drug than semaglutide. Of course, that's my opinion, right? No health advice, no financial advice. Point here is one has to be patient. If you're fearful about HIMS, yeah, sell. But ease the sales over a long period, and of course, this is all your own decision. This is no financial advice on this channel. Another example of patience. This is IREN. Many of you ask me now to talk about IREN. Well, and I see it in the comment section. Well, you'll be pleased to know that I've covered IREN a good old 4 times, and I own IREN. Actually, IREN, my cost basis in IREN is right around $10. So I bought it not at the valley of despair, the bottom. I didn't buy it at the bottom, but I bought it at around $10. So it's nice, in a matter of 7 months, 40%, 30%, depending on where it ends on the day. That's a nice return. But it's a long-term play for me. I'm not going to sell IREN for 30% in 8 months or 9 months. That's a long-term play. So all of my analysis that I've made on IREN, you can go ahead and watch it. It still holds. It's, the sum of the part on this stock doesn't add up, right? Which is the main reason why I bought this stock. The sum of the part, should mean a valuation that's much greater than the current valuation of IREN. These transformers are expensive. Access to power is expensive. They have newer mining equipment, and that's expensive. Now, IREN is not a very big position for me because I'm a Bitcoiner, and they don't hodl the Bitcoin. And so of course, a lot of us who like these companies for the Bitcoin, we get shocked whenever we hear that a company is selling the most pristine asset to buy dollars. But that didn't hold me from owning IREN for the AI HPC play. I believe Nebius is the best AI HPC play right now. I'm not the only one who believes that, but I do think a lot of the miners are going to have a re-rating in their valuation. IREN would be one of these miners. I prefer Riot because Riot hodls the Bitcoin. IREN doesn't hodl the Bitcoin. That's the main difference. And Riot's main data center in Corsicana is 50 miles from Dallas, and I believe that's more valuable. But I may be entirely wrong. It's all about the connection, and there's a lot of people who are happy owning data centers that are quote-unquote in the country because you're selling training compute. If you're selling training compute and not inference compute, for training compute, it doesn't matter as much where you're located. Anyways, I like IREN. Like I said, I've covered it 4 times. it's an inexpensive stock. I'm sure if I were to do the analysis again at $13 or $14 a share, I would still find it inexpensive because it was expensive by quite a wide margin when I was analyzing it around $10. So I like this stock. I'm glad that people and the X sphere is finally waking up to this stock. But it's worth another analysis, and I'll likely do another analysis for the stock soon. Another stock I want to talk about, again, people telling me about this stock in the comments, it's CorMedix. So CorMedix is a similar story. I try to be data-driven, but we all have our opinions, etc., etc., etc. Hopefully I do a better job at being data-driven than Jay Powell. Anyways, the point is CorMedix, right? Why did I buy CorMedix? Why do I like CorMedix? Because when I input everything in my valuation framework, it's the cheapest in its sector. Well, there's actually another stock that is cheaper than that. You'll know on my Patreon. I share these spreadsheets, by the way. This is a newly updated spreadsheet. I released version 3.0 of my most undervalued stocks spreadsheet. CorMedix in this space is actually the second cheapest. I'll give you the cheapest. The cheapest is BioStem. But BioStem has a binary risk in the sense that they may be taking off Medicare coverage. They may lose Medicare reimbursement in January 1, 2026. And so that's why BioStem is trading much cheaper, 5 times cheaper than CorMedix. CorMedix, I don't think, has that binary risk because the product of CorMedix, in my view, is compelling to Medicare and is compelling to the dialysis center and doesn't cost, well, BioStem doesn't cost too much either, but it saves money to Medicare by avoiding infections. That's what CorMedix does. Anti-infective solutions. Let's talk really briefly about, well, first of all, if you don't know what CorMedix is, really briefly, let me show you what CorMedix is. So CorMedix, dialysis. Patient who have to go on dialysis, and that's the end of diabetes. Typically at some point, you are going to have kidney failure at the end of diabetes. So you've had diabetes for a while already, and unfortunately, you need to go to dialysis. When you have to go to dialysis, you typically go multiple times a week, 2 or 3 times a week. And what they do is they flush your kidney, right? They clean your kidney. And so these tubes, you see, they are connected to the dialysis machines, and they have to stay there, and they sit there for like an hour or two. And then they go home and spend their weekend, and then they come back and they do it again, and they do it again, and over and over and over again for an average of 9 months or something like that. In the past, there used to be a lot of infections in there. Okay, so what CorMedix does is they created this product which is called DefenCath, which in between dialyses, in between treatments, you fill the tube, you fill it with the 2 tubes, you fill them with DefenCath. And that is FDA approved to lower the risk of blood infections. So you're less likely to have an infection. And because of that, of course, Medicare loves it because infections cost tens of thousands of dollars, not to mention the patient may pass away, not to mention the dialysis center's performance is based on how many people have an infection. The dialysis centers want to have the fewest infections possible because of ethics, A, and because B, you don't want your patient to die. And so there's a lot of forces, in my view, that lead this product to be very successful. The product is a token $200, but for $200 you actually create quite a positive impact on the patient. So that's what DefenCath is in a nutshell. Now let's go to the news. I know many of you have been asking me about this news. So and I don't really know what to make of this myself. Right now, I would say this hasn't been managed the best by the company because on June 23rd, they announced a new customer implementation. They announced that a large dialysis organization increased their target by 50% and that the implementation is going very, very well. So that's very bullish, and the stock runs to $17. And so we're all happy. I'm happy. This is great. And then 4 days later, they announce a public offering, and Mr. Market, in its usual wiseness, says, "Oh, common stock offering bad, dilution bad," and they drop the stock and they sell off the stock and they sell off the stock. The logic would have wanted that you do your public offering, you do that offering before you actually release that to the market, before you release the updated guidance to the market. Now, they have a fiduciary duty. When there is material information, they have to share it. So maybe they shared that material information because, it's the rules, because the SEC, because the moment they got that information, maybe they got a piece of information that led them to this poor sequence. I don't know. Maybe something is going on. Why do they need the cash? This is a cash flow positive company. Somebody on Patreon mentioned they could be working on an acquisition. Maybe they're acquiring another company, and so they need the cash in advance to acquire another company. I don't know what's going on. I know that, A, I forgive them because the stock is just too cheap for me to be picky. Point number one. And point number two, they have a fiduciary duty. The management team has a fiduciary duty. This is likely a question that's going to come out on the conference call. Anyways, the point is the stock has been a roller coaster. It was way up and it's been way down today, down 17% on this news. But it doesn't change the fact that the revenue growth, in my view, is going to explode. It's going to accelerate because there are two LDOs, large dialysis organizations in the United States. Two large dialysis organizations in the United States. One of them is Fresenius. Another one is DaVita. If DaVita sounds familiar to you, it's because Warren Buffett used to own DaVita, and Warren Buffett used to be very big on DaVita. And for the best of my understanding, that DaVita is the customer that's currently ramping, and the other customers is Fresenius. At least a few articles I've read. They're ramping with Fresenius now. This is just what I've read online. But anyways, if they have a two large LDO, large dialysis organizations, if they have the two large dialysis organizations ramping their product, adopting their product, and they were mentioning 40 to 50,000 potential customers. I mean, on a twice a week basis, 2 vials twice a week. Well, that's a lot of money, and that's a lot of customers, and that's a lot of impact. That's a lot of dollars. These centers are very profitable. Not to mention, they expand the life of patients on diabetes. So anyways, I see so much goodness in this. I like this stock a lot. I look at this as a buying opportunity. I think DefenCath has the potential to become the standard of care for dialysis at dialysis center. They're the only FDA-approved solution lock that helps lower infections, blood infections. I think there are further applications coming for catheters, over catheters. Catheters are a standard, form of administrating medication at hospitals, etc. So I think there could be future applications going. And of course, the business is cash flowing quite a bit. EBITDA margin, as I calculated, is 52% on this stock, and so that's pretty crazy. Of course, when the growth slows, I'll just sell the stock and I'll leave it to value investors, and I'm sure a lot of value investors will be very interested in that cash cow that it should become, should this product become the standard. I like this product very much. It's simple, easy to understand, and it's very helpful. And I think they're going to have a much easier time negotiating their prices after their 3 years are up. They have to negotiate new prices with CMS. I think they're going to have a much easier time if there is a high use of the product. I think they're going to have an easier time negotiating the prices going forward. So I like it very, very much. Moving on to the last stock that y'all have been talking me about, it's KULR. Another stock that requires patience, right? That's the theme of this video. CorMedix requires patience. How about KULR? Well, KULR requires perhaps even more patience, and you have to be okay with violent swings with KULR. So, of course, those on my Patreon know that after they announced the 8-for-1 split, I actually added to my position. I'm sure a lot of the people who study KULR more deeply did. The truth is we kind of had a good news is bad news event. So they were included in the Russell 3000, so that was a welcome news. But that also meant that they needed the stock to be above $5 in order to get more institutional adoption. And so in order to do that, they had to do a 8-for-1 stock split, which they did. And so Wall Street, in its infinite wisdom, Wall Street sold KULR because they made this deep analysis. Split's bad, duh. Split's bad, duh. And you may remember my video I made specially on this, on the 841 split. I made a special video on this. I was taking you the example of SoFi. When SoFi had a split rumor 3 years ago, the stock dumped. And it was just based on a rumor, and the stock dumped. It's just... I don't know if it's a common belief of traders and they all trade on this because they all have this common belief. This has no impact on the shares. A split is a split. The economic stake that you have in a company prior to the split and after the split is exactly the same, but Wall Street sells it whenever it hears it. And so that was a good news is bad news situation, but you can see the stock is recovering nicely today. It's up 21%, and also this is why I DCA, because the price you see, you need to average it over multiple months to get a better idea of the price. I mean, imagine on KULR if you had gone all in when the stock was trading at pre-split $3 or $4. If you had gone all in, that was not the time of all in. If you space out your buys, well, then you're on the safer side. So anyways, my view on KULR hasn't changed. They still have a 300 million ATM that they can use to buy Bitcoin. Go read the announcement. That's the purpose of ATM, to buy Bitcoin. They're going to buy Bitcoin in that ATM. And I want to call your attention to their price to NAV. Their price to NAV is a 2.4. Semler's price to NAV, for example, is a 1.06. So let's go for this very, very quick analysis. How do Bitcoin treasury companies work in their simple version, not in the preferred world, not in the debt world of Michael Saylor? In the most simple way, Bitcoin treasury companies accrete by issuing new shares above a 1x price to NAV. You sell $1 for, in the case of Semler Scientific, $1.06. In the case of Mara Holdings, 99 cents. So Mara cannot accrete by issuing new equity because they're trading below 1. In the case of KULR would be selling a share, a dollar worth of share for $2.43. So they accrete. They create a yield in dollars of 1.43 for every $2.43 that they collect. The last $1 is dilution. Go through my math, my common ATM math. Under 5 minutes, I walk you through the math as to how this works. It's below every single one of my MSTR video. Go watch that video. I walk you through the math to see how it works. So, and Semler, I didn't like when Semler bought Bitcoin recently because they bought it at a price to NAV who was so low. Some could have even argued they actually diluted the shareholders. I didn't like that at all. I like that Mara has stopped. Mara understands that this is not the time to issue shares. For KULR, it's an entirely different story. For KULR, they can issue their shares now. They can do their 300 million ATM now. It's accretive for them. They can do it. And they trade at 2.4x MNAV. And the only reason why you explain this is because this company was a company that was liked by shareholders prior to the whole Bitcoin treasury thing. Some shareholders of KULR like it for what I'm going to call, for lack of a better word, the space hype. They like it for the space hype. Now, I believe space is early. It's a little too early of an investment for my blood, but it will eventually become a main hyper-growth theme. So people in that space are early. That's my view. If you are a company in the field of space exploration, you're going to trade at a premium. Most of the peers of KULR, if I were to another company I can think of is Lunar Technologies, another one. There's a few, I have them on the spreadsheet. There's a few companies that do like pure play space stuff. They trade expensive. They are expensive companies. Why? Because space is hard. It's not easy to do a battery that's going to be operating for 2 years in a satellite at minus 30 degrees Celsius. It's not an easy knowledge to have, and so the market places a high valuation on the space stuff. And so their strategy is that KULR is getting no hype from the Bitcoin people, right? MicroStrategy gets hype from the Bitcoin people. Metaplanet gets hype from the Bitcoin people. KULR doesn't get hype from them. KULR gets its hype. KULR gets its price to NAV from their space activities. So I hope KULR continues to be successful with their space activities. I hope they have a successful launch, I think, in a year and a half. I don't follow it too closely, but I know a lot of the KULR community is very excited about their launch, and they're going to launch batteries, and they have their batteries on the Mars rover, and they have their batteries on the moon. So I hope they continue to foster their space purpose, their space battery purpose. That's why the company is called KULR. I hope they continue to pursue that purpose, and meanwhile exploit that hype to sell new shares to go buy Bitcoin, because sure enough, they can double their number of Bitcoin very, very, very quickly. And so I would say KULR is a highly misunderstood company. Yeah, because if you like KULR for space, you're gonna hate the Bitcoin treasury company, and if you like KULR for the Bitcoin treasury business, you're gonna be like, well, what is going on with this space stuff? I don't want to be in this space stuff. So it's kind of a mutually beneficial merger between two disparate shareholder bases, and the stock is going back up. And once again, you don't judge a stock like that over a 1 week, a 2 week, or 1 month period. You judge a stock like that over, well, more than 4 years. Bitcoin treasury, anything Bitcoin based needs to be judged over more than 4 years, as most Bitcoiners obviously know. And the company loses money, as do most companies in the space field, but it also grows their sales very fast. The CEO has guided twice on the calls then the sales would double in 2025. Go back to the last earnings call and the earnings call prior to that. He said twice that the sales would double. So it's got sales growth, it's got revenue growth. If it's got revenue growth, it makes me happy. So it kind of ticks both marks for me. I wouldn't invest in the company if it didn't have. I would not invest in KULR just for the Bitcoin treasury company, and I would not invest in KULR just because of the space hype. I invested because I think it's kind of merging two companies that would be so. As you know, I'm a big lover of MSTR. I only have eyes for MSTR, so that's my Bitcoin treasury company. And as you know, I don't do pre-profit company, or I try to be very careful whenever a company doesn't have any profit, and I believe space is too early. But the combination of the two makes it interesting and makes me go out a little more on the risk curve than I normally would. So anyways, but always keep in mind position sizing, of course. That's important. So anyways, obviously this was not investment advice, not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.